What's going on, everybody? This is Caleb Franzen with Cubic Analytics. It is Saturday, June 18th, just after noon Eastern Time. Wanted to record this video today because we're seeing some pretty nasty price action in the Bitcoin and crypto markets right now. And basically for the past, I would say like 6 weeks, maybe 8 weeks or so, I've been posting some pretty interesting charts and data denominating the price of Bitcoin in something different than US dollars, right? So essentially we could take Bitcoin and we can divide it by something like the S&P 500, which is what we're looking at here in this chart. We could do the same for the Dow or the NASDAQ or 20-year treasuries or something of that nature, right? Essentially to try to give us an indication of how the price of Bitcoin is holding up or performing relative to other assets, basically as a way to gauge how the market, broadly speaking, is viewing risk sentiment and basically opportunities of Bitcoin relative to other assets. And this is really important to look at, not only from a macro perspective to understand kind of how broader risk dynamics are taking place and manifesting relative to Bitcoin, but we can also take a look at some of kind of like these actual raw macro economic indicators, if you will, which we'll get into in this video. So basically what I wanted to do today was to take a look at some of these charts in real time and basically give a discussion and analysis about what I'm seeing on the chart and what this could be implying for where Bitcoin may be headed. Basically in the short term, maybe over the course of the next 2 to 6 months, essentially, right? As always, we don't know exactly how long these trends are going to play out, when the macro picture starts to change or materially shift. But one way or another, right, this is a good indication for how we should be looking at the market, broadly speaking. So really quick, let's go ahead and dive in. We're going to start by looking at the price of Bitcoin denominated in the S&P 500. And considering that the S&P 500 is roughly 25% technology stocks, but is a basket of 500 of the largest US companies, we can essentially look at how the market is perceiving Bitcoin relative to the broader stock market, right? And a stock market that you could say is modern, right? I wouldn't necessarily consider the Dow Jones to be a list of modern companies, though some modern companies are in it. But I would say generally that the S&P 500 is a more accurate depiction of modern stocks, modern companies in the United States today. And so we can see here on the chart, we had this massive run up in 2015, 16, 17, peaked just at the end of 2017, as did the price of Bitcoin. With a significant rollover, we had a big base breakout here, followed by this kind of choppy consolidation range. So not only have we recently, in the past 4 weeks or so, broken below the 2017 peak, but we've also now started to break below, literally today, this kind of parallel channel, if you will, right? And so that lower bound of this channel was acting as support, basically going back to early 2021, starting in January or so, and continue to work as both support and resistance, implying that this is a key level of Bitcoin relative to the S&P 500. So with this breakdown that we're seeing in the chart, this basically implies to me, objectively looking at this, that Bitcoin is likely to underperform stocks in this environment. And essentially this helps to confirm that we're in a risk-off environment. And in a risk-off environment, the riskiest of assets are going to underperform the less risky assets. And so typically we consider stocks and maybe the S&P 500 to be a relatively high risk asset. But when we put Bitcoin in the mix of that from a traditional market perspective, most of the investment world views Bitcoin as one of the higher risk assets in the market. So this is a great indication of, again, confirming a risk-off environment. This is not at all what Bitcoiners want to see, right? For someone who has a significant amount of my portfolio in Bitcoin, this is definitely a sign of concern. Continues to indicate the need to pump the brakes, be very prudent and to basically exercise risk management practices in this environment. That doesn't mean I'm selling Bitcoin here, but with a breakdown like this, this isn't necessarily saying that we have bright days ahead in the near future, right? So again, this is just one chart, so let's continue to kind of flip through this here. As I mentioned, right, the Dow Jones is something that we can also take a look at. And we're seeing roughly the same thing here, right? We had the massive run up in 2016. Let's just get this fit on here a little bit better for everybody. So we had that massive kind of cycle peak, if you will. We had the big breakout at the end of 2020, big extension here and kind of a consolidation. We had a double top actually with the November highs in Bitcoin, which has now led to a massive decrease here, right? So basically we peaked out around 1.9 and today it's less than 0.65. So this is down roughly 67%, right? Which is just an absolutely brutal environment. If my math is correct there. But again, you know, we're essentially confirming the same thing that we saw with Bitcoin versus the S&P 500, another massive breakdown of a critical support level, a proven support level for that matter, and now we're breaking below prior resistance. As most technicians and traders will know, prior resistance can act as future or current support in an eventual retest of that former resistance level. Because we're not using it as support today, to me that indicates that there's more downside ahead. This is further confirmation of a risk-off environment, so on and so forth. Let's just kind of round out here with the major US indexes, and we'll pull up the NASDAQ 100. This is pretty interesting. We can see the 2017 peak here doesn't have clearly as much significance as something like the S&P 500 or the Dow Jones, right? We've been trading beneath that level for quite some time. It never once even attempted to act as support. But I do have this kind of red parallel channel in the chart to indicate kind of an upper and lower bound for resistance and support. The interesting thing that I'm seeing here on this chart is not only are we retesting the lower bound of that red support channel, but we are coming into a multi-year support trend line shown by the green support levels. And so history has shown us since the end of 2018 that this has generally been a strong level of support. We can see that we broke down beneath it temporarily in March 2020, but we weren't able to close below that level, which is why I ended up duplicating this green trend line and tagged it basically to the low close there in March 2020. And so as we come back into this range here, this pocket, this is going to be a very important potential support level. And you know, if we end up seeing a breakdown beneath this green trend line, again, that would be cause for concern to again confirm a risk-off environment. As we think about stocks, technology stocks are considered the riskiest of all stocks, if you will, right? I mean, obviously you have something like biotech or ARC or something of that nature, but broadly speaking, if we're looking at sector-based investment themes, you could definitely argue that technology stocks are considered to be the most volatile or risky of all stock market sectors. And so with Bitcoin potentially getting ready to break down below this multi-year support trend line, that would also be cause for concern, showing a material deterioration in the price of Bitcoin relative to technology stocks, again confirming basically no risk appetite in this market. So that's definitely something to watch. As we think about risk assets and riskless assets, if you will, I think it's also important to pull up the 20-year Treasury bond ETF, TLT, and we can look at the price of Bitcoin relative to TLT. And this is something that I shared a couple weeks back as a potential support zone here. If we look at those 2017 highs and basically the support level that we had seen throughout 2021. And so we can see this was support here. It was again support in May through July 2021, and today we're breaking into this support zone in general. it's worth noting that this is an extremely wide support zone, right? So I don't know if we'll catch support within this range, but as we look at Bitcoin relative to risk-free assets, this is definitely a cause for concern if we break below those 2017 highs. If we look at the long-term trend here, right, again, we're in logarithmic scale, but it's no surprise to see that Bitcoin has just absolutely demolished the return of treasuries, which aren't known for having outsized returns, right? But regardless, this is a pivotal retest here of, a former resistance range that could now act as support. If we break below it, that would be another sign of concern in the market. So that's definitely something I'm going to be watching as well. Let's look really quickly at some of the more macro indicators, if you will, looking more at some of the broader economic data. This is Bitcoin versus M2 money supply. This is definitely cause for concern. This was something that I've also been highlighting for some time now. We've essentially had a double top here with the Q1, Q2 peak into the Q4 2021 peak. Nice clean little double top there. And now we've started to decisively break below the 2017 peak. So when we think about the amount of money in circulation, or the monetary base, if you will, right, which the Fed has direct control over as they print money and they purchase assets, we typically see M2 expand. That's a no-brainer. So it's great to price Bitcoin in M2 because Bitcoin is theoretically designed to protect against an expansion, basically what's the word for it? Anyways, an expansion in M2, right? An unchecked expansion in M2. That's the word I was looking for. And so as we see a breakdown here of Bitcoin price in M2, this is again cause for concern. Again, I don't want to start looking at picking bottoms here because I don't know where a bottom will be. Anytime you're in a risk off or consolidation or defensive market, in my opinion, you don't want to look for potential bottoms. You want to start to look for signs of a reversal as it's happening and materializing. And so I'm not going to sit here today and try to predict where we're going to bottom, because this all really depends on the macro factors and the monetary policy environment. And so I don't know when those dynamics are going to change, because all of that depends on the evolution of inflation data and labor market data. So I don't have a crystal ball for the economy or Fed policy. So again, I'm not going to try to predict when we're going to bottom in these metrics. But I will certainly in the future provide updates on when we're starting to see potential signs of a reversal. However, today we're seeing signs of material deterioration. And I think this warrants a lot of attention in this market, right? Again, confirming we're in a risk-off environment. I think the last chart I'd like to focus on is loans and leases in bank credit. This is beautiful here. So again, if we're looking at loans and leases in bank credit, this is coming from the Federal Reserve's database, basically reporting on the value of all outstanding loans and leases issued by commercial banks in the United States. So again, as we think about something like M2 as being the monetary base, we can think of total loans and leases as a measure of credit creation derived from the expansion or decrease in M2, right? So as loans and leases increase, in my opinion, that essentially foreshadows additional inflation potentially coming down the pipes. We all know that credit creation helps to drive inflation dynamics. And so as we think about the purpose of Bitcoin from a theoretical perspective designed to act as a hedge against inflation, this is definitely an important thing to monitor over time. And we can see over the long-term chart, right, Bitcoin has acted as a quote-unquote inflation hedge in terms of outperforming the pace of credit creation. And so as we're seeing on the chart right now, we're having a critical breakdown below those 2017 highs and starting to pierce below critical support levels. And so again, now we're starting to see kind of the combination of Bitcoin and some of these actual macro factors and data points, if you will, and we're starting to see a material breakdown in the price of Bitcoin relative to key economic data that we should be certainly paying attention to. And so as we're in this market today, right, these breakdowns are happening this week over the last 2 or 3 days, and most certainly being exacerbated by today's price action. Last I checked, Bitcoin is trading around 19.2 thousand. Let's go ahead and pull that up actually. One thing that I like to look at is the Bitcoin all-time history index. And so again, we can see here, right, if we're just looking at it from a nominal perspective, just looking at Bitcoin divided by US dollars, we can see, right, we're right on this 2017 peak. We had a clear support level. I was highlighting in real time when we started to break below it, highlighting that the next potential support zone would be 19.2 thousand. And that's pretty much exactly where we are today, hovering just above 19,000 even. And so as we come into this level now, potentially getting ready to break below another critical support level, again, the prior resistance from 2017, as we're getting ready to break below this level, that's another sign of material deterioration in the price of Bitcoin, denominated in US dollars now, signaling again a risk-off environment and potentially foreshadowing more pain ahead. Again, I'm not selling Bitcoin at these levels. This analysis could be wrong, right? So I don't know. I'm not at this moment thinking about selling my Bitcoin. However, I'm also not rushing to go in and buy more here. I've seen a lot of talk and chatter about people starting to aggressively dollar cost average, whether we're retesting the 200-week exponential or simple moving average, whether we're looking at different RSI data points, whether we're looking at the Puel multiplier or indicator, I'm not sure exactly what it is, or the MVRV. There's all these kind of like long-term bottom indicators that we can use for the price of Bitcoin over time, and through different back tests, they seem to be effective. But in this market, the raw price action is telling us to continue to be defensive in this market. Again, with no crystal ball here and no light at the end of the tunnel for when the monetary policy environment is going to shift, I don't think it's appropriate to be aggressive in this market right now. And again, that doesn't mean that I'm selling Bitcoin. However, I do expect to see further consolidation in the price of Bitcoin. And I think for long-term buyers, this will produce an environment where we'll have attractive buying opportunities for the price of Bitcoin. But as of right now, I'm not seeing this as an attractive environment. I think that environment could be coming very soon. I do think it is appropriate at this time for some investors to dollar cost average at these prices, but again, at very patient, prudent, and consistent levels. So I can't advise on individual investor circumstances, but I know for me personally, I'm not dollar cost averaging right now at these prices. I think the time is coming soon, but right now, this again confirms the need for prudence and patience in this environment. And so again, I think it is important to look at different metrics other than just Bitcoin US dollar. And so in this video, we reviewed, the price of Bitcoin relative to different assets or maybe economic indicators, if you will, to give a picture of more of the macro risk sentiment, more of the macro dynamics that are at play right now. And so I think it's important for investors to continue to monitor those metrics that we reviewed in today's charts and in this video. If you're not already following me on Twitter, I highly recommend doing that. Obviously, I have to give myself a shameless plug here, but I'm going to be reviewing these charts very frequently, likely on a weekly or bi-weekly basis going forward, in order to, basically analyze the developments in these different charts, because again, I think it's extremely important that we continue to do so. With that said, be sure to follow me on Twitter. I'll give a link in the description, as well as my free newsletter on Substack with Cubic Analytics. So that will also be in the description. And again, take care, everybody. This is definitely a defensive market. And as much as we don't want it to be a defensive market, we can't scream and shout and expect the market to do what we want it to do, right? We need to be flexible with the market. We need to be objective in our analysis and exercise patience when the market is telling us to exercise patience. With that, take care, everybody. Hope everyone has a great weekend. Cheers.